Good morning, ladies and gentlemen. Can everybody let me know if they can hear me all right and the sound is coming through just fine? I had to switch microphones over last night, so just want to make sure everything's coming through clear and you guys can hear me pretty well. And good morning to all. All right, great. So cool. With that being said, we got a couple things to talk about today. I'm not really, honestly, after the move in the market yesterday, I'm not even really crazy about, trading for the most part today. Really just taking a second to sit back and understand what's going on in the market. Because people, again, still don't seem to think that things are shaky. Right. And my job is never to, beyond trading, right? I take part. Part of it, my job is to help inform and help people see things that I'm seeing that maybe they don't. And for the past 2.5 years, beyond the doom and gloom of the market crash, the one thing I could probably pride myself most on is really telling people that it's just not a good market to buy and that there's better options out there, like buying gold and silver probably gives you a better return than stocks will over the next 4 to 5 years. And so first things first, we'll take a look at the market. Just because we have one nasty down dropping day does not mean that the market's just going to crash. Just because we have 2 bad down dropping days does not mean that you should sell every single one of your equities and then go buying gold and silver. This is something that you should have and should be doing gradually, probably. But anyways, so we'll take a look at the market. You can see the downward move that we're getting here. This is normal. This stuff kind of happens all the time where we get aggressive downward moves, usually driven by some type of news catalyst. So previous day, it was the interest rate cut. Again, most people, I don't know if you guys were with us the day before they cut interest rates on our stream. We specifically said if they cut interest rates, there's a strong chance the market's going to go down in value, whereas most people were considering that it would go up in value. Though it's like a reverse psychology right now because, it's like reverse psychology because, when the Fed cuts interest rates, they're basically cutting interest rates due to their monetary policy, right? And what they feel is the best, path forward for controlling the economy. Okay, that's the key word. They're not cutting rates due to monetary policy that will be best for the economy. Remember that. What they think they're doing is best for the economy. What they're doing is not good at all for the economy. See, that's what people have to understand. The Federal Reserve doesn't actually do a good job pretty much at anything other than telling you data that we can all already figure out ourselves for the most part. What they do really well is try to control and manipulate financial numbers to try to control and ensure market conditions. That's what they do. Okay? If we didn't have the Federal Reserve and we didn't continuously print money that we don't have, mind you, all of us, myself included, need to go to work every single day and bust our ass, generally, to make money. Or we can trade stocks, which takes extreme risk, to make money. So this whole time we all have to go and bust our ass and work really hard and get employees and pay our taxes with our hard-earned money and give our money away. The Federal Reserve can just walk in their back closet, click a button, and start printing more money. So that's another problem, is that no matter how hard you work in this life to make $1, just know that dollar is of zero value because it's constantly behind your back getting reprinted. Okay? So just know that you basically work for money that can be free already. You shouldn't even have to work for the money because we can just print it anyway. So if we're just printing it anyways, then everybody should have an abundance of money. But that's not the case. All right, so the markets, okay, we wouldn't need the Fed if we went back to something called the gold standard. Now, many people think that it's impossible to go back to the gold standard when in actuality, it's not impossible. Nothing's impossible. It's just very hard. Again, it's like a heroin addict who's been using heroin for a long time. You're right. It's not going to be an easy transition to take someone who is an addict off a very addictive substance. It's going to be a challenge. But if you do, the outcome will be far greater than it would be if you stayed on, right? Your life expectancy is going to be very short as a heroin addict. Your life expectancy will be much greater if you were off heroin. Whereas our financial and economic stability would be much better if we didn't have a Federal Reserve continuously trying to control and manipulate markets. Not really manipulate, but control, essentially, right? If you have a free market, so to speak, where the amount of consumer spending raises prices and things in natural order, where you're not constantly trying to cut rates, raise rates, cut rates, raise rates to cool and heat up the market, you will have you'll have less aggressive bubbles in market recessions. But again, we just don't do that for whatever reason. Okay, so the Federal Reserve cut rates for the first time since 2008. Every single time the Federal Reserve starts to cut rates, a recession follows. Is it self-fulfilling prophecy that whenever rates get cut, then the market tends to go? Or is it because the Federal Reserve cut rates and that's why the market's going to go? Who really knows? But history tends to repeat itself, and history has proven every time the Federal Reserve tends to cut rates and the market tends to go down. Okay? So it's not surprising that we see this big move down in the market on the day that they cut rates. And then to add on top of it, President Trump adds another 10% to $300 billion worth of tariffs from China, or goods from China. Yesterday, tweet to go in effect September 1st. Right? So insane. We're having these two nasty drops, right? So what I'm trying to get at is that, again, the market's strong, right, guys? Isn't the market really, really strong? Isn't consumer spending, it's up, and unemployment is down, right? That's all. It all looks great, right? If it's all so good, then why are we throwing gasoline on our fire or trying to with the interest rate cut? If the market was doing as well as it was doing, now I know that the rate cut can be there to help with inflation, right, and things like that. It's not just primarily a strong economy, but if it truly were a really strong economy, then we shouldn't be having to do too many cuts here. But anyways, with that being said, what I wanted to touch on, secondly, just thought of it. Now it's kind of going out of my head. Oh yeah, right. So here's one thing you always hear: that the economy's strong and unemployment's this, and manufacturing numbers are this, and this is that, and that is this, right? It's like anything in life. Everything looks good until it doesn't. Okay? Have you ever been out on the dance floor in a nightclub and you're kissing on some guy or some girl and the lights come on? Exactly. Everything looks better until the lights come on and you go, shit, I don't even have a cell phone. I don't have a number. I got to take care of my grandma tomorrow. I'll be busy. That's what you basically say, and then you run away. So again, everything's going to look good on the surface until the lights come on, and then everything will make sense. Okay? Making sense of it before it happens is usually the hard thing to do. Okay? So I've been trying to make sense of it for the past 3-4 years, and what I've come down to, again, is the same thing. Mainstream media will never tell you it. You'll never hear it on mainstream media because you cannot do it, right? You cannot come out on mainstream media and basically tell people that we're going to go through an economic recession and stocks are going to tumble. You're going to automatically start chaos, right? You can't do that. You just have to let chaos be chaos. You have to let it do it itself so that you can't blame anybody, right? Though I almost positively feel Donald Trump is going to be the scapegoat of the next economic crash and recession, almost guaranteed. And then that is going to ensure, possibly, well, we'll see. That was going to ensure a Democratic presidency or even socialist presidency going forward, whether it be this election or the following. Pretty sure that it's going to ensure a blue party presidency. Pretty close. So, anyways, with that being, own the chaos. Exactly. All right, I'm going to read through a couple questions here, and then we'll get into the stocks. I know I was just kind of giving some back context there. We haven't talked about any of the stocks here on the watch list. All we've touched on is a SPY. Yes. 290, George Lewis. Yeah, you're right. Anybody that read that comment, 290 on the SPY is a good dip buy level for the market. So if you like to be an options trader, you could probably do a bullish call spread down at 290. You could even write some puts, however you want to do it, whether you want to be a premium buyer or if you want to be a premium seller, then pick your poison. But 290 is probably going to be a good level to buy off for a 2 to 3 day bounce here in the coming week. William, see, that's because you don't listen to CNBC is there for entertainment, but not direct use. Gabriel, you're right. Not every time that the Fed cuts rate, the market goes down. You're right, but most history repeats itself the same, and that's the way we're looking. Nobody ever knows a time horizon for a recession because you have to understand what you're really asking yourself, right? For an automatic, recession, let me put it this way. A recession is very easy to understand when a recession is happening. A recession happens when you have 2 quarters of negative growth or declining growth, shall I say. So when we put in two quarters of declining economic growth, then we'll be in a recession. So it's pretty easy to figure out when you're in a recession. You have 2 quarters of negative growth or declining growth in the economy, and then you're in a recession. A full-blown crash, who knows, right? So I'm just reading through a couple. Did you bang a dude? I hope I didn't bang a dude. That'd be bad. That'd be bad. Do I like Trump? Whether or not I like Trump is completely irrelevant. I like people other than Trump. I don't mind the man. I mean, would I care to be his friend? Not really. Again, sorry, just reading a couple comments here. Okay, next thing. So let's go into GLD. So to touch on the whole market thing, right? Anybody care to look at the chart of GLD, or have you guys? Bang. Okay, it really doesn't look all that cool from this view, so let me change it. Bang. Oh, still not the right view. Never mind, it's a daily chart. Bang. There we go. Does anybody notice, can anybody tell me what this is right here from this candle to this candle, this red candle, this green candle? Does anybody know what formation that is? I'll just be sitting waiting, so when you're ready, let me know. Yep, there you go. It's engulfing. That is like the most picture perfect bullish engulfing candle that I've seen in a long time. So is it safe to say that gold is probably bullish? It's been bullish, but is it safe to say it's probably continuation of bullishness? Yeah, probably. Probably. Now, I can say that most people wouldn't just be buying gold to buy gold. Most people are probably buying gold because they think it's going to go up. Most people buy gold and they think it's going to go up because they're pretty sure that stocks are going to go down. That's another good signal. Interesting. So, gold starting to look extremely well. Okay. And if you guys remember some of my streams back from 2018, we were saying buy gold and buy silver. Granted, it took a long time to actually start moving, but here we are. So anyways, gold is going to be strongly on the watch. I might even start buying gold. I will be starting to buy more gold, probably holding for the next 4 years or so, 5 years. I think we'll see prices increase. So just wanted to touch on gold, so you guys this bullish engulfing setup looks really well. All right, next one on the list, CLDR. Yeah, so CLDR. Anyways, right, if you look at the chart, so if this is a daily chart, there was a gap down the last earnings. This earnings were kind of spiking up a bit. So, anyways, I would watch this long, okay? Just, I could go into a whole explanation about this and about that and everything, but you should just watch CLDR long. If it doesn't go long, who cares? There'll be more trades in the future, but this is something to watch long. It's a good setup so far. It's a strong push. Probably held some Fibonacci levels, honestly. Let's see. Yep, held 50% retrace consistently. So if that's accurate, and we're gonna see, back to I didn't do what I wanted to do. Why you do that? I guess it did do it the way I wanted. Maybe it did. Did you even click? God damn it, you motherfucker. So, if this is accurate, then we might be able to see price targets of about 825 to 860 levels on the day. Damn it. What did I say? 825 to 870, 825, 870. Yeah, so if CLDR has a really good spike this morning, I would anticipate us maybe moving up towards $8 to $8.60 as highs. John, for Fibonacci, ideally it's from the start of an impulsive move or from the start of a trend to the end of a trend. So that's, yeah, so you go from start of a move to the end of a move. So anyway, CLDR definitely going to be in the watch. I mean, there's many other stocks too, like Pinterest reported earnings. This looks relatively decent. You could follow that, right? And then again, if you look at any single stock from yesterday, they all got smoked, right? You look at Facebook, you look at Apple, they're all going to be down because the market took a really big turn to the downside. So again, anything you're watching, be mindful of the market today. Today's the day to really watch the market, right? And you guys hear me say this, but you usually only hear me say it when the market's going down. I don't generally tell you to pay too much attention to the market when it's going up, because when the market's going up, that's fine, that's good. But when the market's going down, that's when stocks tend to follow the price action of the major indexes. When the market drops, your stock drops. When the market squeezes, your stock goes up. So that's why you pay much attention to the market today. You know, Afria, APHA, some. Yep, you're exactly right, KM. Yeah, big guys are pulling out slowly but surely. Will the market bounce today? Actually, yeah, I could see a long play on the market, but I'm remaining bearish. I'm not interested in, like, it could bounce, right? Like the market could bounce, but I'm not here to guess whether or not the market's going to bounce here today. I'd rather just pick a point where I know it's more likely to bounce, which is going to be down at 290. I think that's the price. Yeah, down at 290, I would expect to bounce. If it bounces today, it's just a random pop and a random squeeze and whatever. But true bounce levels are going to be at structural support systems, which right now is down at 290. So yeah. Anyways, APHA. Someone's asked about the AP because I know they like had like a 600% increase in earnings or something like that. Revenue, was that it? Yeah, this is worth watching for sure. If you're looking at any weed stock today, and any weed stock's probably up, so let's look at ACB. ACB is not really up too much. ACB is getting towards a good buy point or close to a buy point. It's going to be down in this green patch, so we're almost entering into the buy level here on ACB. CGC getting smoked. Yeah, it doesn't look like. Yeah, it doesn't look like the weed stocks are really getting sympathy from APHA earnings. So, anyways, yeah, APHA is something decent to follow today. Yeah, I mean, there's not really nothing much more there. I mean, the daily chart's not really good. It's right at a seller point. So basically, if I were to trade this long bias, the only way I would trade a long bias is over the pre-market high of 705, and even then, I'd probably be hesitant towards trading it. Um, RHG. Oh yeah, I guess I haven't looked at this today. Hmm. I'm gonna go with this is probably not gonna be that great of a stock on the day. I mean, just based on the way it typically trades, spike crash. Probably wouldn't. I'm not gonna trade it. I'd stay away from it. If anything, you might have a small bounce here at 275. KM, you won't even be able to this. Yeah, if it goes up to 4, I mean, again, this is a better stock to be shorting. Again, I wouldn't be buying it. If is home good for a swing? Big sell off depends. Is that structural support system? No, it's not. It's in a full on downtrend. Would not say that's good for a swing trade unless you're short bias, and even then, it probably won't even be that great. So no, I would say home is not. MRNS is a no go. Just one. It was one random candle that got bought up, but the price is actually at 101 now. So MRNS no go. AMD again. So AMD, what should you do with AMD? You should follow the market today. If the market goes up, AMD is going to go up. If the market goes down, AMD will most likely go down. Not entirely, but generally today's the day to follow the market. So anything large cap related today, follow the stock market, and you'll have a better idea of how to trade your stock. Structural support would be like this. Kind of. Like this is structural support from here to like there. That might be a little much more. Well, yeah, but like that. That's structure, right? This little dip area, that is sort of structure, right? Go back. Like this here, that is structure. Netflix. It's a good one. Top of this zone is all resistance structure. Okay? This here, these marks that I'm making, there's no structure here. If you look at it, the stock was just going up. No structure, no structure. Let's look at TLRY. It's always a good one to watch or look at. Ready? Look at this whole move up. No structure. The move is just going up, 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 up. No structure. Price of the stock can fall faster with no structure. That's why when stocks go straight up, they come straight down. No structure. When stocks go up, pull back, consolidate, go up, pull back, consolidate, go up, pull back, consolidate. All those pullbacks and ups are creating structural channels up. Good support. Straight up, straight down. Grind up, grind down. Okay. BYND. Okay. No structure going up. Straight up, straight down. Now, BYND. Entering into some relative structure. Straight up, straight down, now into structure. Below all this structure, from 125, straight shot down to 100. No structure here, just straight gap. Okay. All right. Oh, it's 9:01. Got to get going. All right, guys. Everybody take care as usual. Thank you guys once again for tuning in. I have much appreciated it. So everybody take care. Have a great day, and I'll see you guys on the next video.